All right, good morning. Did you see that horse crap right off the freaking gates? He's trying to set a stop loss and ended up closing the position. That's some horseman larky. That's why you don't use limit orders. I should have set this to stop market, and then it would have set the stop loss just under the entry there at 420. I basically took the entry at the high of day, was a little bit under, because as you can see here, we traded up to the high of day and then rolled over. So I kind of got my entry off right in this area. Sat through this a little bit. I was going to get out if it would have went up a little bit higher than that. At 2.5 points is where I had my stop loss. So it didn't get up there, ended up rolling over. We're seeing a little bit of a move back to the upside due to the market open. So that's normal. I mean, it happens all the time. You get a move up. I am expecting or wanting the market to roll over with an island top reversal or a morning star, evening star formation, if you will. You can see yesterday how the SPY closed down on the day. I did end up buying a put right around the end of the market yesterday, 448 put. So the marketplace would have to get all the way down here to 447 before that put would start to pay. So basically what I'm watching here is I'm going to see if supply will hold this right here. Could potentially also take another entry on this, but the thing of this is these fees will kill you. I mean, they'll absolutely kill you. So we'll see if we can get another spike up there. If I pull over the intraday here, you can see that the NQ is trading well under VWAP, popped off the bottom edge of the Bollinger Band there. It's not a Bollinger Band, it's the VWAP band. And you got your ESD bands down here, which is more along the lines of a Bollinger Band. So we'll see if the S&P 500 can break back under the VWAP. I would like to probably try to get a fill at 45.18 if I can. But like I said, it's not looking like really great. This looks great. This would look better if it was trading lower for the put. Yesterday, posted a trade inside the Discord. COP, let's go look at that. ConocoPhillips, based on the fact that oil is lower. come over here. So yesterday, this trade was all the way up here when I posted it. Wait a minute here. What is going on? What's going on? Give me 1 second. Open this up. All right, so basically I posted this in the chat. Like I said, I like this one better for a short because I was looking at another one, PGR, based on divergence, but I don't like to trade on divergence alone. I like to trade on price action, and this had the makings of a short setup. I didn't buy a put at the highs because I wanted to see how the day closed. So I ended up waiting until the COP was down in this area right in here before I put on the position near the later end of the day. And as you can see, we are trading down today. So I was looking at this as a bear flag. Let me pull up some moving averages for you real quick. There you go. So we got the cross there on the 20 and 50, 21 and 55 EMAs. And yeah, probably should have put the put on a little bit higher. I didn't expect it to break back above that support. And you can see right here, like I said, this traded straight up to an objective price level. This is how I trade. We don't look for divergences and stuff. We wait for objective levels and we see how closes happen around them. You notice this candle here. The previous day, it traded up to resistance, rejected, ended up closing right on the day. I wanted to see the same exact thing happen to basically give me, that credence to say, yeah, I like this. I think we're going to see this potentially break down. But the problem that I had with the trade is that we were very close to weekly res. Yesterday, obviously, this was green. So it opened right in this area and then traded up on the week. So 21 exponential moving average coming in here, curling over, which is what I like to see. So anyways, long story short, that trade is working out, and it is working out pretty good right now. So we'll probably go ahead and close that for a 2x or much bigger than a 2x return right there. Currently, P&L on the day. I've been struggling with the small account recently, but we're still up on the year. We're still beating the S&P 500. Current P&L on the day, 172.75. So I need more days like that, obviously. Obviously, you need more days like this. But let's go ahead and check out Bitcoin as it is bouncing. Let me just make sure. Okay, so we do have an area here where we could struggle on this trade a little bit. So I am going to keep this thing on watch. So that way I can keep bouncing back and forth to it. That way you guys can watch me manage a trade live. All right. I do not want to lose the majority of those gains. So we will be keeping a close watch on this. I do not want to see it get back above the opening range, as that would be an opening range breakout. And then we would be looking for price to trade higher. So we'll watch this area real close. Bitcoin trading into daily supply down here, another objective level. Now, here's the thing. Bitcoin did something very strange yesterday as it bounced off the 21 exponential moving average down here and exploded to the upside, closed above daily res. So we now have a higher close. We did not take out the high that was put in on the 9th of November, but that is a higher close. And we did bounce off of monthly support, which is what we were looking for to hold. So if Bitcoin's going to have upside continuation, I would expect it to have it here, 36,475. If we start closing hourly candles under that, then obviously I will not take the trade. But if it can come back down there and stay there, I will. So we'll give that a good look as well. So let me put an alert here. The last couple times I've put alerts on, I have not gotten them. Well, I guess the alert is button isn't working today. Anyways, all right. So yeah, right there, 36,475 on Bitcoin is definitely an order or definitely a level of relevance. Ethereum down 1.68% on the day, giving back some of its gains that we seen the other day. Big, strong, huge move to the upside there. Got some downside, did not quite test old resistance or the 21 before finding support and blasting off back to the upside. This level right here is simply old daily res. All right. Old daily res resistance can turn into support from the top side. So we watch resistance levels for potential support. Could potentially look for an entry there on Ethereum if you wanted to. All right. I want to see ConocoPhillips stay down on the day, lower than 2.0%. Lower than 2.0%. S&P 500, in order to get all the way down there, like I said, I need this thing down at 447.90 before I will start getting paid. It's a very windy day out today. It's been very windy for the last couple days, so if it is buffering, I do apologize for that. I'll pause that. Maybe that'll help. Oh, get an alert on GDX, and I was just trying to put an alert on something else. Well, let's go look at GDX. I don't think I was. Yeah, that alert was from a long time ago, and I don't know why I would be alerting it there, anyways. So it looks like huge lag on the alerts, but GDX was something that I was looking for a long. Here is a piece also that I want you to see. Opening a browser here. Yeah, we got like dial up going on back in the old days. Anyways, in the US, this is Walmart. Walmart sees deflation coming. In the US, this is from Doug McMillon, the president and CEO of Walmart. In the US, we may be managing through a period of deflation in the months to come. And while that would put more unit pressure on us, we welcome it because it's better for our customers. So naturally, let's go over here to Walmart and look at what happened. Boom. That was a big drop on Walmart. Big drop on Walmart. You're making fresh all-time highs, ripping everybody's faces off, and then you wake up to see this thing's down from 170 all the way down to 156. Not very good. Not very good at all. The Russell is down 0.3% after having a very strong day on CPI day, as well as the S&P 500 and everything else did. The news that we got today, let me pull my charts back up, not over here, but over there. Thank you very much. So the news that we got today on the eco calendar is initial jobless claims. That's bearish for the dollar. It's more. We were expecting 220K. That's up from previous month of 218K. So we got 231K more people losing jobs. That's what the Fed wants to see. Fed manufacturing index, however, came in as a beat. It's still in negative territory, but negative 5.9 is better, greater than negative 9. All right. It is greater than negative 9. So yeah, that's what basically got the market moving intraday. If we pop down to the intraday chart here, we get rid of the moving averages because we don't need them. You can see right in through here is when that news came out, right there, 8:30. So the market took the news as good, went up, took out daily high. This was your high of day today, and then rolled over. And that's what I was looking for to happen. However, you can see it's finding support down there at the VWAP. So that must mean tech is popping to the upside. So what I'll go ahead and do is I'll give this just a few minutes. If it starts closing 5-minute candles higher than this 5-minute candle, then I will close that put that I have on the SPY for a loss. For a loss. All right. Let's see here. Yeah, it's losing $28 right now. So we'll go ahead and close it out. Well, let's give it a minute. The thing with trading the S&P 500 or the SPY with those, it wasn't a 0 date expiration. It will expire worthless today. And I paid $57 for it, which is roughly right at that $60 mark, which is my risk tolerance. So technically I could let it trade all day. But if we're consistently closing 5-minute candles higher than the high of day, there's no point in holding it and eating a full loss on it, right? If you don't have to eat a full loss, don't. But this trade was never in profit. Like I said, I bought it 2 strikes out of the money yesterday. So it was never in profit, not even for a little bit. And then KHC Kraft Heinz is a trade that we put on the other day. It's a slow moving stock. We got a lot of time on it. But basically there was some heavy option call activity in this thing. So we bought it on this day right in here. So far it's moving up, but like I said, this is a very slow moving stock. Kind of needed to get up into the $36 area for it to reach at least 50% profits. So we'll see if this stock can pull its way out of here. Also, notably for this stock, it did get an upgrade by an analyst the day after we took the trade, which kind of helped it gap up. But you can see gap up, close down, not really what we want to see unless that support holds. Support would be old resistance there. So that's what we want to see hold, and we want to see it continue to move up. Just based on, like I said, the unusual options activity in that on the call side. This is typically not something that I would take along on based on the fact that it is in a downtrend. However, it's a safe stock. I mean, they make money, right? They make catch up, stuff like that. It's always going to be used. So we'll see if this stock can catch a bid in the next couple months. I do believe we got at least a month on it. These 29s. So we'll go over to these. Yeah, we got 43 days left on that trade. So no point in closing it just yet. Leave it alone. Let it work. Euro USD up on the day. Dollar down. It's down, but it's down very mildly. 0.20%. Not even a 0.5% down. So you're seeing the euro up a little bit after that little tiny range day we had yesterday, which is normal. When you have a big, strong move candle like that, generally we look for the next 2 to 3 days to be choppy and sideways, and we'll see if the trend will resume to the upside. If it does, I'm not going to give it much room. All right, euro just is not good. It just isn't. I mean, I'm not trying to crap on anybody that lives in Europe or anything like that. I'm not crapping on your currency. It's just you can see since it started, its inception. I mean, this thing has literally just been slowly over time going down, down, down. So we are expecting parity to get hit again eventually. But who knows when that'll be. It could definitely make fresh yearly highs. I'm not taking that off the table. I'm just simply saying eventually, you know, if we have a recession or any of that stuff, then I would, or if the European Union considers Europe to be in a recession, then we would probably be looking to short that. So yeah, we got that. TLT trade, I've been speaking of bonds lately because basically I think bonds is going to be a very good trade. We got all of this potential room, right? That was where we were when we had to sell off. So from 83 bucks to 150 would be a fantastic long-term hold. But you can see right now investors are starting to creep back into the bonds. This could be still a pullback and it could end up rolling over. We'll see if that happens or not. But as of right now, I think if you can afford it, you could buy some calls on this thing. Calls is the way to go because you can leverage, or options is the way to go on this because you can leverage it up. Or if you trade commodities futures, you could just simply buy the 20-year. The near term 2-year is definitely a good trade too. There's not a whole lot of ETFs that will give you that. I don't know. I mean, you got SHY, SHY. This is a 1 to 3 year. But we do know for, well, not for a fact, but I did hear him say that he was long the 2-year, and I am indeed talking about Stanley Druckenmiller. So Stanley Druckenmiller's long the 2-year. It's probably something I would want to do. The 2-year on this platform is different. On Thinkorswim and on tastytrade, it's /ZT. On this, it would be ZT1 exclamation point. There's your 2-year T note, and there's your trade. As you can see, a lot of volatility happened. Though, excuse me, I don't know why I'm burping. I simply drank water this morning. And you can see this week is getting a little bit of a pop. So I want to buy it as support. I don't know how I'm going to do that yet. Whether I'm going to go with options on an ETF product or if I just trade the bond straight out. NASDAQ back to high of day. S&P 500 back to highs of day. Not a lot of people showing up for the stream today. I would assume that's probably because there's not a lot going on in the markets today other than Walmart getting absolutely killed. Let's see if we can pull anything up on the fire list, see what we got going on over there. See if we got any low floaters popping. This one would have been the one everybody would have had their eyes on, and obviously from the opening range, you're losing it. So, yeah, unless you can start closing candles back above 254, I don't see this thing going higher. That's your opening range right there. 285 is what you need to see candle closures above, but we'll see how it plays out. Dollar rotating back to the downside. S&P 500 just now making a fresh daily high. Boom. Fresh intraday highs. So I'll close that S&P 500 put or SPY put if indeed it continues to close 5-minute candles above the high of day. All right. Opening range breakout would be here. There is an estimate of a 21-point move on the SPY today, or on the S&P 500 today. 21 points. If you look right there, you can see you're currently up 8.4. So this thing has room to go to the upside. Room to go to the upside. I'll pull this back up over here and show you how far it's got to go. On the E-mini futures contracts, you can see highs up to 435. Now, that's what's priced in. Lows, the low end of that $21 move would put you down here at 44.93. All right, so you're kind of trading in the middle of the expected move for today. So not really a trade to take. This thing has been absolutely getting its I mean, it's just been the bullish trade has been the trade to take. The reason I got short this morning was, well, I figured it would make a fresh high and then move to the downside, at least pull back, give me 5 points. I think I got 3 out of it. I'm not exactly sure where it ended up settling, but I'll look at that later. But generally, all I try to do on this is get 10 points and bounce, and then go back to the options. So we'll see here. We did get a close, indeed, a 5-minute close above the high of day, and NASDAQ is pushing. So we got fresh highs on the day. So it does not look like you're going to get that evening star reversal, even though it did look like we were going to see an evening star reversal. Very bullish asset. You know what I mean? You typically don't want to short these assets when they're ripping people's faces off. Huge gap up. Then you have a gap up, closed down. If this candle closes bearish today, if it closes bearish today, then you will have that evening star formation. So my best guess, I wouldn't expect it to run the highs and then reverse. You know what I mean? I would expect it to find resistance somewhere intraday, maybe where it is currently, because you have a daily res right there. Did not find resistance at supply. So keep an eye on 450.36 intraday. That would be daily res. So we'll see if this stalls it out right here or not. But as each minute that goes by, I'm literally losing time value on that put. So I definitely need to close that thing before noon. So yeah, those are just some of the trades that we're in. I'm still kind of holding on to the short here in the pound dollar, but I'm probably going to close that. Actually, it might already be closed. The Aussie dollar trade hasn't been closed yet, I don't think. I think I got a setting, a trailing stop order setting roughly in this region here. So we'll see how that plays out. But I mean, if the dollar continues to struggle or be weak, which it probably will, because the market is literally pricing in interest rate cuts as early as May, potentially, there's better than a 50% chance as of right now that they are going to cut in May, which is giving a bullish lift to the marketplace ultimately, and that will weaken the dollar. So looks like the dollar fell right back into its range here and is going to continue to trade range bound for the rest of 2023, which we've only got half this month and next month to go before we will be making a fresh yearly opening range, which is going to be fun because depending on how the Fed acts in the next rate decision will determine how we approach the markets next year. But all in all, if the marketplace, if the Fed does start to cut rates, the market could still become bullish or stay bullish for a little while. But if the Fed has to cut rates aggressively, more aggressive than they initially anticipated, then obviously that's going to cause a rip in bonds. And the money that's going to go into bonds is going to come out of all your risk assets. So your Magnificent Seven will be the first ones to get annihilated in that scenario. If we achieve a soft landing and the Fed doesn't have to do anything and nothing gets broken and we do not see a recession, then there is no reason why these things cannot continue their bullish move. I mean, obviously, it's been bullish all year long. To be long this year has been the trade of the year. And that's basically where we stood at the beginning of the year on Bitcoin and on risk. My current stance at the very beginning of the year was, as long as inflation continues to trend lower, then risk assets would trade higher. That's exactly how it played out. Dollar making fresh lows on the day. Let's get back over there. It's not making fresh lows on this platform. But on Thinkorswim, it is making. Oh, that's the day. That's the daily chart. Sorry, you are making fresh lows right now. Duh. I thought I was still looking intraday. Yeah, there you go. Fresh lows on the day, or close to fresh lows on the day. So I think we need to see the dollar turn around in order to get risk to roll over, and it does not look like that's what's going to happen. We have closed 2 5-minute candles above today's high on the S&P 500, so I'll probably let it pull back just a little bit and I'll close that put out. And also I'm keeping an eye on this. I don't want to see this get higher than 2%. I don't want to see it get like 1.99%. I want to see it continue to have a trend down day, and we'll milk that put for all it's worth. For all it's worth. It could continue to go down. You know what I mean? Like, because it is a fresh breakout to the downside on the daily. Once again, this was an oil trade. There goes oil, right? The reason that oil is not moving to the upside, even though we have turmoil and all that going on in the world, is because of it's a demand issue. There just isn't a demand out there, and that's what's leading some economists to think that we probably will be seeing a recession, even if oil continues to trend lower, because people can't afford to do it, right? So, I mean, there's a lot of things playing out here. A lot of things playing out. There definitely isn't a good solid trend on oil. Oil has turned back down to bearish control. So, yeah, I was trying to get a put on this, but I was unable to do so, as by the time, like I said, I watched for daily closes. I like to, trade. If I'm day trading, I'll look for my entries early in the morning. But for swing trades or whatnot using options, I like to see how things look, how they're going to close. So yeah, I was unable to get that off. The day after, though, gave us an awesome opportunity to enter at daily resistance, and this is what I keep trying to tell everybody, right? That is an objective level because it is a daily close. So you could have simply been expecting this to hold, since it did hold on this day. You traded well above daily res and ended up closing under it. So as long as daily res holds, when you price transfers back under the resistance level, that's when you enter your short position, either via puts or via futures. Or if you can trade this CFD, which is what it is, you can trade the CFD, then do that. Big pullback on the S&P 500. A big pullback candle, 1 5-minute candle. There. Let's go back over to the SPY where we have that daily res line drawn. You can see it closed right at it, man. Just like right at it. And then you had a force move up. Boom, back down. So one could potentially buy a 0-day option if you wanted to, around 450 or the 451s. But that's obviously, make sure you can afford the loss, because this thing is trending higher. Your VWAP has pointed to the upside. Your 21 exponential has pointed intraday to the upside. So keep that in mind. Trying to short something that is ripping, not the greatest trade advice. Dollar making fresh daily lows. Just pushing on down. So that's going to keep these lifting. Russell, man, I don't understand why the Russell's getting killed today. So Russell is where we should have looked for the short. Yeah, see, that's what I was looking for to happen literally on the S&P 500. This exact move right here is what I was looking for. Just a pullback, just down to 458, under 458. As that would put that put into profitability, and then I could close it down. Testing right now, yearly opening range on the Russell. I don't know if you are on the IWM. Let's go look. As that's what most people trade. No, you're not testing it yet. But IWM yearly opening range 175.93 could be a good spot to look for buying opportunities if the market is going to continue to the upside. Small caps got beat up the most, so that's where you would find the most value right now. A lot of investors will buy highs, obviously, 52-week highs or whatnot. I don't trade like that because it just doesn't work for my mentality. I hate to see a trade turn against me instantly, and a lot of times that's what happens when you buy 52-week highs. Just look at Walmart. Right? If you'd have bought calls on Walmart yesterday because it made fresh 52-week highs, you'd be waking up and crying today. And that is a drop, folks. Let's go look and see if Target did the same. Nope, Target actually gapped up huge. So this could be a defining moment for Target, as it could have bottomed. You are overbought, so you don't want to look for the entry now. This is the last support level that was broken and tested. So I wouldn't expect the entire gap to fill. If I was looking for pullback moves to get long Target, I would watch 121.79. USD CAD got a trend line here. Right through there, you can see all of this kind of invalidated the trend line. However, it is bouncing. You got monthly resistance right there. That monthly resistance was playing a huge part in keeping this thing down a while back, but then the dollar got strong and it blasted right through it. And that's acting as potential support now. But in order for me to take this trade long, I need to see dollar find support. I can't just simply get long USD CAD on the hopes that Canadian dollar remains weaker than the USD. The Canadian dollar is down 0.42%, whereas the DXY is down 0.2%. That is why you're seeing a rip on USD CAD, simply because the Canadian dollar is weaker than the USD. The best trades are the ones where when you get the trend anyways, is when you're long a strong currency against a weak currency. So for instance, short USD JPY looks like a good trade right now. Now how long this lasts, I do not know. But yeah, there you go. Today would have been a short today only, because this thing may find support, as the carry trade is still strong out there, unless the BOJ intervenes. And there has been some reports that they did, but there is no concrete evidence. And trust me, this is what it looks like when they intervene. 500 and some pip move to the downside. This right here was on CPI. So that is what carried the move down lower. So everybody that bought up in here was stuck at that point. And then you've seen a rapid unwind that we did catch, by the way. But the terrible part of this is we didn't close that short position out and then get long at the yearly open, which is what we should have done. Is right there. Would have been beautiful spots to look for long entries. So we are seeing a pullback on the SPOOs, which is good for me. I want to see it pull back. I would love to see it pull back. I would love to see it drop back into negative territory on a day and get down to 447.87. That's a pretty big drop, though. So I'm not expecting it. 448 is right there, but you need to get under 448. It needs to be at 447.99 before that put goes in the money. And that put needs to go in the money by the close today, or it's going to expire worthless. So we have a trading decision to make. But we'll watch the VWAP. If it bounces again, I'll close it out for a small loss. This is trending lower, 2.89%. That's good news. Yeah, making fresh daily lows. I love that. About to take out the low right here from October the 4th. That oil weakness in the oil market is really helping this trade out. So there's just a beautiful setup. That's just a beautiful setup that was posted at the perfect time. Good morning, everybody. Good morning. Oil at daily support. Nice dive. Yeah, I don't know if I'd buy oil right now. I mean, something else is going down. You're down 3.85% on the day, 3.85% on the day. You do have old daily support there, and it could end up holding. The run is getting a little bit long in the tooth. You are almost at oversold territories. I don't think you're going to build any bullish divergence in there, not yet. Maybe next week it will, but as of right now, it's just a free fall. I mean, you're back at $73 oil. I would not believe that, not in the slightest. If you would have told me when oil was trading above $90, that in just a few short weeks it was going to be trading back down to 73. I would have called you an idiot, especially since what broke out over in the Middle East. But that just goes to show you, don't expect the market to do what you think it's going to do based on something that's happening somewhere else, because that's generally not what happens. Generally, the market goes in a direction that can hurt the most. Obviously, a lot of people were long. I know Santiago Capital got long on calls last week. They posted it on Twitter at $75, I think. And they said if it continues lower, they're going to buy more calls. I don't know why, but who knows? I don't know how low that it would have to go in order to force them out of that position, too. But he is a money manager, so his risk is probably handled. So I wouldn't go out there and buy calls just based on some money manager on Twitter. All right. Let's see if we can find him here. At Santiago. Boom, 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 boom. I actually don't remember when he posted it, and he is pretty active on Twitter. Give me a second. Give me a second. I like to follow these guys just simply because they're wrong just as much as regular. I mean, most of your macro investors think technical analysts are like, it's dumb. It doesn't work, when 90% of their macro analysis never works out either. You know what I'm saying? Like, why are you getting long oil, bro? It's in a free fall, and simple technical analysis is showing you that. Well, I'm not going to look and keep looking, but I did see it. Literally said buying calls on oil, and if it goes lower, going to buy more. But whatever. So yeah, that's that. S&P 500 testing the VWAP. COP down 3.09%. Beautiful. Keep going, baby. Nice. Keep freaking going. And that's pretty much all I got on right now. I had a lot of positions open, but I had to close them because like the Tesla position was in profits mad yesterday. And yesterday we literally closed the gap. And if you were listening to Tuesday's stream, I said that I got long down here at support based on this, right? Objective level, daily res. Also, it was a gap. Got long here, targeting this area right there, as that would be gap fill to the upside. Yesterday, it hit target. So I took the position off. Today, it's trailing. It's coming back down. So I'm glad I closed the position yesterday and didn't wait till today to do it. So if Tesla finds some support around 228-ish, or let's call it 226 even, then maybe I'll look to re-enter another call position. But it will be a spread because Tesla's options move too rapidly, too fast to trade on a small account. But yeah, checking out Tesla right now, Michelle. Yeah, I mean, that was a beautiful trade. Tesla has bounced back above the 50 on the RSI. So we are, still going to be looking for bullish entries. But right here, we had a trap, and right here, it had a trap. Now, there's not to say that once you broke out right in here, there wasn't a trade to take here. There was, right? So even though it ended up rolling back over, even in here, once you got back above it here, that puts you at this candle there. There was a little bit of gainage to get out of it. So what we want to see happen now is we want to see this thing trend down and then do that. And once we get that curve back to the upside, then we can look for long entries and maybe get it back up to quarterly res. That is if the markets are going to remain bullish, of course. They have to remain bullish in order for me to do that. S&P 500 under the VWAP. Right there. That purple dotted line is the VWAP. So low of days going to be right there. It'll be lovely to see that thing roll over and turn to mud today. And then we'd have all four trades profitable. That first trade was a screw up, but it still was profitable because it was still under my entry where it was closed, which was good. Aussie yen having a pullback day based on yen strength, obviously. Nice move to the upside. Euro yen would have been the way to play the yen trade because Euro yen has just been ripping since it broke out. This is a big area of consolidation right here. Measured move puts it up to about 168. But measured moves don't always play out. Also, don't look for longs just yet, as you are massively overbought. I would watch 161, 350 for potential entries on that. Or 161 spot 36. 161 spot 36. That's where I would be looking for those bullish trades. But yeah, until the BOJ does something, then there's no point in looking to short anything versus the yen. You want to get long, and don't say stuff can't go higher. You know what I mean? I mean, the people like watching this move right here, I guarantee it, they were thinking to themselves, this just cannot go higher. And we're 20 some odd dollars higher, which is huge in FX. Huge. Huge by huge. When you're talking about whole dollar points, whole points in FX movements, that's massive. Massive, considering these things, you know, average true range is usually like 0.45, 0.4. You got a 0.93 move on Aussie yen today. That's a big move to the downside. Pound dollar up marginally. I mean, 0.26. I could see it continue to go up as long as you're making fresh daily lows on the dollar, which you are still. So I think Michelle's long this as well. She can hold it all the way up to 124, as that's where resistance is. That's where I'd look to take that trade off at. Nice job. This is that weekly support right there. You can see it held as resistance 2 weeks ago, last week. This week we're breaking above it. And that's also holding as support for today's move. So good eye on that. You could have just simply watched daily res there. Either way, right? Either way. But nice little moves to the upside there. It does look good. And it is back, like I said, above the 50. Notice your 50 test here. That's where you should have been looking for longs on the pound. That would have put you in this area here. It was difficult to get long there, though, because it did not halt at what should have been support. But it did make this little morning star reversal formation. That could have been a long entry. S&P 500 trading back above VWAP. All in all, the dollar's getting killed. And that's definitely gonna keep the S&P probably a little bit lofty on the day. So let's go ahead and close that trade out. Because like I said, it's 0 days to expiration. So that thing is losing premium by the second. We'll go ahead and close it out for a 0.5% loss. Boom, done. Now, all we got to do is watch. KHC isn't going to do anything today. It's not going to affect the P&L at all. But this thing can, because if we go to it, I got 36 days on it, and it's up in the money. Pretty damn good. Pretty damn good. So I'll keep watching it today, see how it closes out, and look for another opportunity. Let's go see. What was that other one I was talking about that I said? All right, PGR. It had bearish divergence on it. Ooh, I'm glad I didn't short it, because we'd be losing today as it gapped up and you're moving up. I mean, it's bullish. The stock is bullish. It's bullish. It's putting in big divergence there, though. Big divergence, but it's up. And it's up good. I mean, yesterday literally would have been the worst time to take a short on this. So, yeah. Glad we took the COP trade instead. Progressive doing good. Yeah, because they're overcharging clients. I don't know about anybody else's premiums, but my girl, her insurance company's raising her premiums, and she's safe driver. You know what I mean? Like, never been in an accident. Don't even get so much as a ticket. And they keep raising her premiums year after year. It's getting ridiculous. The Barry White trading. Thank you, Mr. Slothbag. I appreciate that. It's a great comment, or a great compliment to be compared to Barry White. What is 36,475 on Bitcoin? Bullish daily midpoint? Don't get it. Good morning. Oh, it's supply. Whenever you have a bearish candle like this and it tests a level of support, and then you get a big, like almost engulfing. It's not an engulfing because you didn't take out the previous day's low. But when you have a massive expansion like that, then you look for retests of these areas for pullbacks, for potential support. But we do know that Bitcoin likes to play games, right? We do know that. So today has got a little bit of bearish pressure to it, 2.61%. That's not great. Like, that's a little bit of momentum. So I don't like to buy things that have a lot of bearish momentum. But if we get a retest of that support and it holds, so it ultimately did give me what I wanted there. Let's remove one of them. We don't need them both. Yeah, if it comes back down to this area, 36,475, we will look to take a long entry on it. We'll see what happens. But I need to see this area hold a support. I don't want to see a candle do this, right? And then the next candle do this, because then that's not support holding, that's support getting wrecked. Yeah, that's what it is, Run DMC. It's daily supply. Or, I mean, it is pretty close to the expansion midpoint, right? If you range it, you'll probably be really close to the 50% marker. Right there's the 50% marker of the entire range. If we do it like Tom does it, it's still roughly in the area. But it's just the supply. And this isn't the most perfect supply candle ever made. I don't like big range candles to act as supply. But the whole theory behind it is when you drop like that and then you get that massive expansion, there was actually more buying taking place near the end of the day on this candle than there was selling. And we know that because of the reaction that happened on the very next day. Right? So once it got down in here, that's when there was a lot of buying occurring. So people would see this move down and think this is a breakdown, Bitcoin's going to get killed. And then no, that's when buyers step up to the plate. I mean, they've been buying this thing. You're getting higher closes, and you really haven't taken out any bearish closes down in here yet. So Until you do, like, it's going higher. It's having a pullback today, but that ain't nothing major. So, like I said, 21 points is all that was expected today. It's not a big range. We know that it can do way more than that. Obviously, this day right here was way more than its expected range. And, we're trading at those levels. Here's a chart, though, that I want y'all to look at for real. This is the S&P 500 versus the money supply. This is your '08 bear market right there. '08 bear market. Notice how you made fresh highs and then you got the pandemic. You made new highs. 2022 bear market. Right? And then we made fresh highs again and we got a pullback. We're coming back to that area. So for some reason, this area in here is huge for this. Let's call it that. I mean, it's a big box, but just that whole area right there. In fact, you haven't been able to get above it since you did it over in here. 98, 99, and then obviously the '01 crash put you back under it. So very, very interesting chart here that I am going to be keeping my eyes on, because if this thing struggles to make fresh highs on, or at least get above that green box and continue, then I am going to be looking for bearish trades, for longer term bearish trades on this S&P 500. So yeah, to get this chart, it's as simple as that. You just type in SPX/WM2NS. And you can do that with anything: Bitcoin, Apple, any asset. Apple's up 1.3% on the day. That's probably what's keeping the S&P 500 moving. Apple is a huge, huge, huge part of the S&P 500. And also, let's look at one more thing, and then we'll wrap this stream up if we don't have any other questions. Let's see here. We're split on the day. We're split on the day. We got 51 stocks advancing. We got 49 stocks declining. Now, this is just the S&P 100, the 100 largest market caps in the S&P 500. There's no point in looking at the S&P 500 on this tool. You can just look at the top 100, because the top 100 is going to dictate direction. And as you can see, it's a 50-50 day out there. So no real, conviction for the bulls or the bears, to be honest with you. The oil majors, Exxon, Chevron, have been on a buying spree, buying Pioneer, ETC market. I would not like that as a shareholder. We can look at Exxon. Yeah, it's not doing very good. Unfortunately, I don't know Chevron's ticker just right off the bat. I could probably type it in. CVX. Yeah, it's getting hurt too. On a day where ConocoPhillips is getting hurt too. On a day where oil is getting hurt. But you do got 2 daily supports on oil, one at 74.025 and then 73.141. At 37.342 as demand. $342. I don't know. I mean, this is the proper demand zone, right? That's the proper channel to go through. Maybe you're looking at a demand on a smaller time frame. I don't know. Don't know how you came up with that. But on a daily time frame, it's just the last bearish candle before you get the bullish breakout. That's going to be your demand candle. And it goes the same way for the supply candles. The supply candle would be your last bullish candle before the big breakdown. So that would be supply. Just the open of that candle. So supply and demand is exactly the same. It's the open on a bullish candle for supply. It's the open of a bearish candle for demand. So we'll see if demand holds or not throughout the day. Got a long day of trading. Cisco's down big. Cisco down big on an earnings beat. So something must have been said that they didn't like. Maybe no guidance or something, but that's a huge gap down. Big gap down. And Lashy, big cheers. Big cheers to you, yourself, my friend. Does anybody else got anything to look at or want to look at before we wrap it up? If I find something else like unusual options activity on a stock that I am looking to short, I'll throw it out on Twitter. But today is Thursday, so the trading week is coming to an end, unfortunately. Meta's down today, gap down. So far, still moving down. Microsoft, I do not understand this stock. This is not a pullback. Even though there are 3 bearish days in that grouping, it is definitely not a pullback. This was the only one that you could consider a pullback because it gapped down, closed down. This gapped up, closed down, gapped up, closed down, gapped up, move up. It's like, when are you going to pull back, dude? Today, maybe? I don't know. I tried a bearish put spread on this and got killed on this candle, so not doing it again. But this thing has exceeded its expected moves. It's weekly expected moves for the last 3 weeks in a row. I mean, just absolutely dominating the weekly expected move. This is all-time highs. All-time highs. It's hard to short that, but I do. I mean, this move is so stretched out. Like, it got up there so fast. You would think you would see at least a 3 or 4 day pullback with some sustenance to it. Like back down to 360 somewhere. Or retest the 21 exponential, something. It's just going and going, man. Never stop. Google, it's up pretty good on the day. They were talking about Google and Bloomberg. Amazon gapped down, but filled the gap. I don't know why it had such a pretty big gap down. So this is what I would be expecting to happen on Microsoft soon. And then, of course, Apple is up, but now it's down on the day. So maybe I closed that put a little too early. But I'll take a 0.5% loss. I don't care. Not a big deal for me. Nvidia gap down, but moved up to close the gap. Looks like you could be seeing another one of those evening star reversal formations. That one is not as clean and as Tesla even. Yeah. Tesla, that's a pretty clean reversal formation. Let's see how Netflix closes today. But that's what I was expecting to happen on the SPY, and it just didn't. Look, it's down now. Damn it. It's even in the 448s. I closed it too early. Daily res held. But it's hardly even a move, right? I mean, like I said, I think this thing had a $3 expected move today. Let's go see. The S&P 500 had a $21 expected move, which is not a very big move. Not a very big move at all. We've seen in previous weeks $48 expected moves. Yeah, today's got $1.75 is the expected move. And I was $2 out. So that I just did it because that put was $57. Right? $60 is my 1% loss. So I was like, well, if it gaps up, really big and the put becomes worthless, I can afford that loss. But this is a massive gap up. And that's a perfect evening star reversal formation. So I thought for sure it would close down around 447-ish, 447.50. But we'll see. Looking for a buy and hold on Baba. Maybe if we close above 79.95. Let's go look at it. Baba is not. Oh, man, this thing is killing me. Oof. Yeah, Baba's trading at the bottom edge of a range that we got there. So, yeah, maybe. You got daily support over there as well. Right there's daily support. Bitcoin already getting down there, so that's not good. It's a pretty rapid move. Some news might have just came out. Yeah, I think some news just came out. I don't know. That's not a very big news candle, but Bitcoin is definitely suffering. That's a rapid move to the downside. So yeah, I don't know if I would buy it. Not with that much momentum. You just made a fresh low of day, so if it is going to reverse, then you would want to see it reverse here and now. But this would be the area to buy it. It just doesn't look good. I mean, here's your momentum. That's your daily expansion. then you get a bounce, and then the trend resumes. After a bullish expansion to the upside that just came out of the middle of nowhere, really, if you think about it. I don't know. I don't know what to make of it. But as far as Baba, yeah, you're at the bottom edge of the range. So one would assume that if it's going to stay range bound, you could buy a call spread on it. You could do something like this. You got earnings coming up today. So I don't know if I would buy a call spread because earnings would be just what's needed to push it down through the bottom edge of that range. This thing says it's already had oh, yeah, it's already had earnings. Okay. So it's already had its earnings. It was trading here yesterday. Big gap down today. Got it. On a beat, a very small beat on the bottom line. So if I was going to buy it, I would buy it based on it's trading at the bottom end of a big range. And I think it's going to stay range bound. So I'd buy a in-out spread, which is just the term. It's a vertical spread, just one strike in the money, one strike out. But I would, all the way out here, it's got dollar wide strikes. I don't like that. So I would probably do a 2.5 or a $3 wide spread. Let's see what that would look like if we did a $3 wide spread. That means your max profit would be 166 with a max loss of what was it? 136. $4 wide spread gives you a little bit more max profit, but your max loss jumps up pretty dramatically as well. Your implied volatility is going against you there. It's going up. See that? 33.3, 33, well, that just changed, but 33.5, 34.1, 34.4, 35.11. This should be going down, not up like that. That's the skew causing that nonsense. Usually when the skew's up like that, I would be selling calls on this. That's all I would do is just sell calls. Sell calls, collect a premium, sell calls, collect a premium. But I would sell the call further out. I would sell it at a 9 delta, but there's just not enough premium on that. And I can, and they do got the buying power for it. Where's $94? $94 is all the way up there. So do we think that it can get back up there? I don't know. Yeah, that one's a tough one, man. If I was going to do it, I would buy a long dated put, but do it with an IV under 50. When you got one here, you got an IV of 39.9. Did the VIX tick up? No. I mean, it did, but something must have happened there. Some piece of news must have came out or something. But anyways, yeah, if you want to buy it, I mean, I don't know if you're buying shares or what, you know what I mean? But you are at the bottom edge of the range. So you could buy like a $78 call or a $77 call and just hold it for a long time. Don't look at the intraday volatility, but make sure you have a cutoff point, like, because this thing moves fast. It's when you have a $78 product with a $4 call, that's it moves quickly. So, and you can just look at the strikes per each dollar move, right? And this is what you would sell it for. So each dollar you can see you're losing about 65, 70 cents on each dollar move. So you got to set a stop loss. And I don't know what yours would be, but that's probably how I'd play it. The safest way, instead of just buying shares, I would just buy deep in the money, maybe a 72 delta, buy the $74 call, and just hold on to it for a long time. This is 43 days out. That's just a month, a little over a month. But the better trade on this, I think, is to sell the option. Yeah, sell calls. But wait for a bounce first. Not yet, because this is a big move down. Almost a $10 move to the downside. I don't want to go in there and sell calls right now, because what'll end up happening is if you do bounce, because you are at the bottom edge of that range, that call that you sold will cause you to lose money. So, yeah. But hopefully that helps, man. Yeah, Bitcoin approached the level and broke through the level. Remember what I said, we don't want to see a big through it, and we got a big through it. So, not really liking that for an intraday buy. But you could keep watching it. If you struggle to close higher time frame levels under it, you got a 15-minute resistance you can watch right there. I mean, support. So if you close a 15-minute candle under 36,339, I would not buy it, because that means you're probably going down to 336,043 and then 36,336. No, just 36. You see what I'm saying? This is the level we want to see it stay above. So you'll be literally trying to pick the bottom. So you'll be trying to catch a falling knife if you buy this. Keep an eye on it. Or you can do higher time frame levels, like 30-minute. There's your 30-minute support. If you close 30-minute under 30-minute support, then you leave it alone. You leave it alone. Because it may be going down on into the 36K, which is a big figure number and probably a better area to buy. But it's down 4%, so you can scalp these little pops if you want to. I'll keep my eye on it. I'll keep my eye on it. I mean, your daily at 37,324 daily demand. You have a line there too, not last bearish daily, but a higher one. Oh, up here? Yeah, that's daily resistance. It's just daily res. I was watching the close yesterday to see if it closed above it, and it did. It did it in one hourly candle, blasted up through there, and then just kept closing higher hourlies. But I don't like to see a move like that and then a reversal the next day, as that makes me think that there's some shenanigans afoot. You know what I mean? But one is still, I mean, if you retrace this low to that high, this is just a 50% pullback. So, I mean, technically one could buy it. It's just got a lot of momentum right now. A lot of volume on that move higher, so you would think they would want to defend that. One would think. Just keep watching that level. I mean, like I said, or your higher time frame levels. You got hourly support right there. If you want to buy it, if you think Bitcoin's going higher, this is the area to do so. It's just, obviously I don't know if it's going to hold or not. I can't see into the future, but it is about, risk management. It's not about predicting which way the market's going to go. And secondly, you're buying it literally at the freaking highs on the year, right? You didn't make fresh yearly highs, but you just made fresh yearly highs on the 9th. Today's the 16th. So not many days ago, you made fresh 52-week highs. You're literally buying it within $1,500 of those highs. So just keep that in mind. But it is in an uptrend. Massive bearish divergence. I would say your divergence is played out. But that is a solid tick down right there. I don't know. I'll just say this. There'll be a lot of stuff happening at this area for sure. Let's go look if it's actually happening right now. It's not. Well, these things change. And most of the volume that was traded today happened up here. And it was mostly selling. Look at all this. That's sell side, sell side, sell side. They were selling the hell out of it from 38 or 37 down. And then finally buyers stepped up right in here. We want to see buyers stepping up here. And you're just not. It's more selling. And as of right now on the day, you got 2.96K bid, 6.48K ask. Almost triple the selling as of right now than buying. today. So just be careful if you do look to buy it. All right. Delayed. Gotcha. Alrighty. So where do we stand on this stuff over here? Looking good, looking good. Not bad. Not bad. Should have held on to that put. It still ain't there though. But it doesn't have much further to go. That put would have been in the money. I just don't like this price action. I would much rather see a steeper pullback. And it may do it today and into tomorrow. I don't think we have any more economic news. Like there's going to be, oh, that's probably what it was. You got a lot of Fed speak today. No, that all came out a long time ago. You got Krosner speaking in 12 minutes, then Waller. They probably won't be speaking about monetary policy, though. But just keep that in mind when you're taking trading positions today that you do have a lot of Fed speak. All right. You guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.